So only one new point in this question. Arrears of preference dividend 51,200. It is given in note. It is not given in the balance sheet. So it is unrecorded liability. It is a liability. Preference dividend we have not paid. We have to pay arrears. So it is a liability, but not recorded in the balance sheet. Balance sheet you cannot find this. So unrecorded liability, if you have paid, entry will be internal reconstruction to cash. But in this question, they have given what? Preference shareholders would forego their arrears. So waived. Unrecorded liability, they have waived. No entry. And already liability I have not recorded. So you need not to pass entry for cancelling that. That is the only new point. Other things are same. Bharat? Bharat?
Sir.
First point in
The unpaid amount of equity shares would be called up.
What is the unpaid amount?
2.5, sir.
So final call. Equity share, final call debit to equity share capital 2.5 into 64,000. Correct?
Yes, sir.
Then for receipt, cash account debit to
Equity share, final call.
1,60,000. Next.
The preference shareholders they would accept a reduction of 2.5 per share. The dividend rate would be enhanced to 10%.
Already 8% cumulative preference share capital face value 10 was there. That I have to cancel. Instead, I have to give 10% cumulative preference share capital. Face value how much?
Face value 7.5.
Super, 7.5. Reduction?
2.5.
Per share entry will be 10, 7.5, 2.5. Total how many shares?
64,000.
Then
The equity shareholders would accept reduction of 7.5 per share.
Equity share capital face value 10 was there. For that, I have to give equity share capital face value
7. A reduction of 7.5, sir. 7.
Reduction is 7.5.
Balance
Per share, if you pass entry, 10 rupees face value, reduction 7.5, upper balance 2.5 will be the equity share capital face value. Clear?
Yes, please.
So upper this into
64,000.
64,000. Then next.
Bad debit provision at 2% will be created, sir.
Upper internal reconstruction to provision for bad debts. Correct? Provision for bad debts is a liability we have to create. Liability increased. All compound entry we can pass. Then assets to be revalued. Intangibles 48. 68 layer 48.
Okay.
So two intangibles 20,000.
68 minus.
Provision when the debtors 3,20,000 into 2%. Then two plant.
Freehold plant. 1,40,000, 1,40,000 minus. 2,40,000.
Two freehold premises. No.
Increased.
We have to increase that. Okay. Stock
Stock 250,
How do we
2000.
increase? So freehold property increase, stock increase.
Okay.
Stock increase by 2000.
Stock increase.
Freehold premises
380 minus 147.
so 240. Correct?
Yes, sir.
Profit and loss account. Also we have to cancel that.
Yes, sir.
Accumulated loss, fictitious assets we have to cancel. 2P in that. So upon internal reconstruction debit will be 61,440. To internal reconstruction 2,42.
2
Clear?
Yes, sir.
At the F.
Okay. The directors would have to take equity shares at the new face value of 2.5 per share in settlement of their loan.
So loan from director is a liability that I have to settle. Normally settled by cash na
60,000.
loan to cash no varum. But I am not paying cash. Instead I am issuing equity shares. Correct? 60,000 equity
60.
shares divided by how many number of equity shares?
64,000 equity shares.
No. Value 64. 24,000 equity shares of face value 2.5. 60,000 divided by 2.5. What I will 24,000. So 24,000 equity shares of 2.5 I am issuing to directors. புரியுதா? இப்போ ஆல்ரெடி ஈக்விட்டி ஷேர்ஸ் எவ்வளவு?
64,000 equity shares.
Now issued to directors
24,000.
So now total 88.
Okay, sir.
G point.
Okay. The equity shareholders, including the directors who would received equity shares in settlement of their loan, would taken up 2 new equity shares of everyone held.
So new equity shares, new issue. Equity shareholders, including the director, would take இதெல்லாம் விட்டுரு, இது வேண்டாம். The equity shareholders, including the directors, would take two new equity shares for every one held. ஒரு ஷேர் வச்சிருந்தா 2 ஷேர் வாங்கிக்கணும்.
Okay, sir.
Existing equity shareholders would receive, they will subscribe equity shares. ஒரு ஷேர் வச்சிருந்தா எத்தனை ஷேர்?
2 share.
So அப்ப 82,000க்கு 2 னா 1,76,000 new equity shares they have to subscribe. Means additional issue. Cash account data to equity share application.
Additional 88.
1,76,000 into 2.5 into 2.5. Okay?
To equity application to equity share.
Wait 1 minute.